Regular Insight viewers recognize her right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Today we want to talk about charitable giving as we near the year end. I mean, we're really nearing the year end. You know, nonprofits like the Allen County SPCA that were just here. Any other nonprofit, this is the perfect time of year.
Of course. So what I want to mention is a couple things though with the CARES Act. So the CARES Act gave us an above line deduction of $300. So a lot of people can no longer itemize because when they did the tax reform, they doubled the standard deduction, they took away the exemption. So most people can't itemize anymore. You've got an opportunity here under the CARES Act with COVID to give $300 to a non-for-profit, or you can split it up if you'd like, and take it as an above line deduction, which means you're going to take that off of your taxes no matter what. So that is a big one. Make sure you give that at least $300. It's an above line deduction. You don't have to itemize. Number two, if you are someone that used to itemize or you're always getting close to itemizing, think about doing double donations in 1 year and then potentially none in the next year. This will allow you to push yourself above the itemization standards and the standard deduction so that you can actually take some of that donation off of your taxes. And the other thing I wanted to mention as an idea is donor advised funds. This is really big this year. There's been a lot of people putting money into donor advised funds. If you happen to have an odd tax year, maybe you sold a business, maybe you got a really large bonus or some sort of transition where your income is higher this year, again, think about maybe making a large donation. The donation does not have to be cash. You can transfer assets into it. So an example, a home, you can transfer a home into a donor advised fund. You can transfer appreciated stocks or appreciated mutual funds. So if you're thinking about doing a donation anyways, think about giving something like a mutual fund that has a lot of capital gains. Not only will you get to take the entire deduction at some point, there's some rules as far as how much you can deduct a year, but you'll also avoid the capital gain altogether. So there's a lot bigger tax savings if you donate highly appreciated assets. They allow you to take off 60% of your adjusted gross income as a cash donation to a donor advised account, or you can do 30% of assets, so highly appreciated assets, against your adjusted gross income. And then also due to the CARES Act, they're also allowing you to take up to 100% of your adjusted gross income as a deduction if you give cash to an operating charity. So an operating charity would be like the Allen County SPCA. Donor advised funds fall outside of that category, so that's where the 60% rule and the 30% rule come into play. But you could also write off your entire income this year. Let's say you've had just an amazing year. Again, maybe you sold a business, you got a large bonus. And once the money goes into the donor advised accounts, this is the big one, you don't have to spend it right away. You can put a one-time lump sum in, let's say $50,000, take it against your income this year, and then you granted money into this, and it's donor advised, meaning that the donor who donated it gets to advise when the money actually now goes out of it. So you can literally donate from this thing the rest of your life to your tithing, your charities. It doesn't have to get spent, because I think a lot of people, when you say, hey, put $50,000 towards charities to help save yourself a lot in taxes, they go, I don't know who I would want to give that kind of money to. This takes that off of the table, and it allows you to say, hey, I know I want to give money over my lifetime. I'm going to take the deduction now to offset high income year. But I can literally not only give this for the rest of my life, you can list a secondary person, so this can go down to your children, your grandchildren. It can be a continuous thing if you're putting a lot of money into it. These are legacy type charitable giving plans that people put together, so it is a good time. We're running out of time, especially to open donor advised accounts, but that $300 deduction, I think everyone should do it, of course, because it's an above line deduction. You don't have to itemize, or again, consider giving 2 times the amount in 1 year and nothing the next year so that you can take some tax advantages for it.
What do I need for that $300? Is it as simple as just having a receipt from the non-for-profit?
Yes, you need a receipt from the non-for-profit. Your accountants will be able to take it off of your taxes next year, again, as an above line deduction, which most people have not been able to itemize with that standard deduction doubling. So this is a grand opportunity. I have not read, they just passed, or they're looking to just pass a new, CARES, another thing of stimulus here. We don't know what next year is going to look like quite yet. I haven't obviously read through the 5,000, I think 100 pages of the document, but we continue to see legislation changes, but we know that this is going to fall into effect this year. So at least give the $300 to your non-for-profits. You can take it off of your taxes, and every little bit helps, and the more that you can pay less in taxes, the more that you can give away.
Absolutely. And listen, they are in desperate need of it this year.
Yes. So many places are in desperate
sure.
need. There's a lot of good charitable organizations out there, and even more now with a lot of families needing help, food banks needing help. More donations are really critical right now as we continue to see, shutdowns due to COVID and limited capacity at restaurants. There's a lot of people that's being affected by this, so we need to step in and do our part.
Absolutely. Well, if you would like to set up one of those donor-advised accounts, get on that now. Do it now rather than later. If you'd like Heather Foster's help, all you have to do is give them a call, 234-2200. Call them today at Foster Financial. We'll be right back.